Phil, thanks for taking the time to speak with Blue Notes today before your address to CEDA on innovation and regulation in the digital age. You cite that wonderful stat that 53% of today's millennials would rather lose their sense of smell than their technology. Yet you add the deeper point that consumers will simply switch to another site if their bank is not mobile optimised. Does that mean these massive leaps in technology can't really sustain a competitive advantage, that they're just expected nowadays?
I think they are expected, and I don't think we can expect to have a sustained comparative advantage unless we keep reinvesting in new technologies. And we've seen over the years that cycle of the way technology comes in waves. So we can't imagine that we're going to make one investment or make one leap and then that's going to be a competitive advantage for some time. Because our customers are seeing new and more convenient experiences at every turn, and they're going to look at the best of their online or mobile experiences from other companies they deal with and think, well, why isn't my bank like this?
Frictionless is a term we start to hear a lot of nowadays, and you've likened it to the experience of driving with an electronic tag down a highway rather than having to stop at toll booths and use cash. What does that mean for existing bank infrastructure, for branches, even for traditional websites?
Customers will look for that type of experience where we already know who they are, where when they walk in, if they've had a recent interaction, we should already know that because we can know these things. And I think it's just that continually raising bar that customers will have, that they won't want to go through those convoluted processes. And of course the one that's really going to cause or make the biggest change will be when they ring us and they want to talk to somebody at the contact centre. Why would we want to take 45 seconds to go through an identification process? Because, as we've talked about with voice biometrics, we can know who they are just by the sound of their voice.
It's becoming accepted that competition and indeed disruption will not come primarily from other banks or even sort of traditional threats. But you argue there's a difference between solving the big problems, which may really lead to disruption, and just solving little problems. How does that work?
Well, I think I read a lot about innovation that's occurring around the place, and we saw when we were in Silicon Valley last year and follow up, there's hundreds of people working on different ideas, but many of them are just looking at small parts of a problem. And if you think about what customers really want, which is have these frictionless or seamless experiences, having somebody solve a little piece of a problem doesn't really grab the minds of the customer. It doesn't really grab people. Whereas if you take a whole experience and make it work, then it does. And I think that's where a lot of the disruptive competition will come, is that we think about payments as an activity, but for most of our customers, a payment is just part of the experience of doing something else. And I think it's the biggest risk we face is where the people who are solving that bigger issue subsume the payment, subsume some of the other steps that are taken. What we need to be doing is finding ways of making sure that the customers remember who we are, that we're providing services, and we may need to branch out to compete on some of these, because there'll be that tension between those who want to suppress the payment and those like us who want to make sure that the customers remember that we're the people standing behind it.
And this gets to the traditional idea that one of the things banks do have is trust. How powerful is still that trust incumbency?
It was, I was at a Visa conference last month, and I was struck by a comment that one of the people, not from the banking industry, but out of the payments technology side, said almost as a throwaway line, of course, what we have to remember is the banks underwrite all of this, meaning all payments ultimately online have been underwritten by a bank, because almost everything that's been invented in recent years somehow piggybacks off the whole credit card infrastructure. And we should never lose sight of that actually both the merchants and the consumer are looking for the bank to be the ultimate guarantor that payments are going to be made and that there's recourse if there's a problem in this.
Are these the sorts of technology issues that the inquiry needs to tackle?
The things that I think we would like to see them tackle is getting rid of some of the impediments to more mobile and digital commerce. So every time there's reference to documents being provided or signatures being required, we're now using an old world concept in a new world environment. So what we're looking for is to make sure that we can fully substitute things like electronic identity verification, digital consents, digital disclosures, all of the things that legislation will have been written in an old world environment needs to be refreshed and modified so that we can be confident that people can engage in digital commerce.
Thanks very much for your time today, Phil. Good luck with the CEDA speech.
Thank you.